Well, let's focus on another company, Amber Enterprises. They reported a solid set of numbers in quarter four. The revenues, profitability, all of them did quite well. The room AC segment as well witnessed a stellar growth in the past quarter. But what's the way ahead? We're joined by Mr. Jasbir Singh, the Chairman and Chief Executive Officer at the company. Hi, Mr. Singh, good morning, and congratulations on a super showing in quarter four. But that's a bit of a problem, right? Because now your brands, your customers will have inventory. We have seen these unseasonable seasonal monsoons as well, which could dent sentiment. And you've mentioned that on your con call. My question to you is, how much weaker can quarter one be if I compare it on a year-on-year basis? Are we looking at a flattish revenue number? Are we looking at a degrowth, or is it a mild growth? Same quarter last year, that's the June quarter, you did around 1,850 crores out.
So in this quarter, we are expecting a muted growth because of the unseasonal rains, especially in the north part of India, in the room AC division. Whereas the mobility divisions and electronics division are on the growth path. So that's the current situation. It will depend. Right now, in June, we are expecting summers to pick up. So maybe the RAC division may see some positivity from the last year quarter. But as of now, in the room AC division, it is flattish as compared to last year.
Okay. So hi, good morning, Prashant here. I have two questions. One is overall volume growth, I think in FY23 was 25% over 22. If I look at the number of units. What do you have a guidance for FY24? And the second question is, have overall margins, they've fallen a long way. I mean, they were 8.5% north 2-3 years ago. They're now at about close to 6%. Have they bottomed? Go on, sir.
Actually, the business model has now transformed into a value proposition than a volume-based proposition, because post-PLI announcements, most of the customers opted for in-house assembly units. So we shifted our strategy in tandem to their strategy of insourcing and started supplying more of components for room air conditioners. On the value terms proposition, we have moved to 29% share of business in FY23. And that is, we are expecting some more uptake from here on as a value proposition on a manufacturing footprint point of view. As far as the percentage of margins are concerned, Prashant, percentage of margins in our kind of B2B business is function of product mix and commodities. So our guidance is that we focus on the bottom line absolute number growth rather than on percentages basis, because we don't know how a customer is going to demand products from us. If we sell sub-assemblies more, the percentages will come down. But if we sell more of components and other units, percentage will go up. So, but on the bottom line basis, we maintain that we have been delivering 20 to 25% absolute EBITDA growth, and that will be our endeavor to continue forward.
And you're saying that you're more and more going into components, right? Because most customers post PLI, etc., are doing the assembly in-house. So you're shifting to components, which is better for margins. And you give that number 29%. That is the share of a unit that you're supplying.
Yeah, so that is in the whole room AC sector. If you see, it's a 25,000 crore market, and the manufacturing footprint comes to about 17,000 crore. Out of that, we are supplying 29% worth of value proposition on the manufacturing footprint.
Okay, got that. I want to talk a little bit about the wearables segment and hearables, because in your conference call last time around, you also mentioned that there is significant growth over here. And, you have done a pilot for communication components as well. What is the scope, Mr. Singh, in this space, and how much could it contribute to your overall business? I mean, what are we looking at in terms of an opportunity over the next 1 to 2 years?
See, electronics division is growing pretty well. From in last 4 years, it has actually jumped from 500 crore to almost 1150 odd crore this year. And large part of the growth has come from wearable and hearable sector. We are quite bullish and positive on that sector. We have added 3 customers in hearable and wearable sector. And on the telecom front, also the pilot lot production has started, and we expect some more customers to be added in coming years on the telecom equipment. So it will be a diversified electronic division with consumer durable home appliances, hearable, wearable, and telecom equipment.
So this number you gave us, the electronics vertical of 1150 crores was this year. How much can you grow it to over the next 2 years, and what would the contribution be from wearables and hearables in the electronics division, say 2 years down the line?
Right now, contribution of hearable and wearable is about 15 odd percent. As we just started this portion in the electronics division, we expect that this will go to about 25%. And overall, electronics division is expected to grow in a range of 30 to 35% for next 2 to 3 years time.
All right, a couple of quick questions. Electronics business, can the margins improve? Growth is good, but from around 5%, do you see it head towards double digits? If you could tell us that. And the motor margins as well, a smaller part of your business, but margins are around 15%. Is that sustainable? I mean, can you hold on to that?
In electronics, yes, we are expecting margin improvement at least by 50 to 100 bips going forward. And we are also entering into margin accretive solutions on the PCBAs. So on 3 to 4 years perspective, we expect these margins to go to about 7 to 8% time range bound. And on the motors front, yes, motors, again, it's a function of product mix. On the BLDC motors, we have less margin. Non-BLDC motors enjoy more margins. So it will depend, but overall, there will be a bottom line improvement in the motor business.
All right, final question. Your ROC, I think, is in, it has been in the lower to mid-teens. I'm reading of Jefferies now, they're expecting it to go to high teens in the next couple of years. Doable, very quickly?
Yes, right now our ROCE as reported is 15%, which was last year 11%, and we expect it to go to 19 to 21% range in next 3 years' time.
Okay, all right. Good speaking to you, Mr. Singh. You don't join us very often, but congratulations on a good past quarter and wishing you all the best for the coming year as well.